Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the flows week ended Wednesday, November 19, 2014, we saw a fairly flat to rather dull period of inflows activity. Let's take a look at our macro groups and see what I'm talking about. Starting off at the top here, equity mutual funds had net inflows of only $100 million this week. Taxable bond funds continued on their happy way with $3.2 billion in net inflows. Munis also were good for about $500 million this week, and money market funds took in $7.8 billion this week. Well, with fairly light flows into equity funds, you'd think that there wasn't much going on in the market. In fact, we've hit a number of highs this year on both the S&P 500 and the Dow Jones Industrial Average. Let's take a look at the flows activity over the last couple of weeks into equity mutual funds. Again, not a whole lot of flow direction over the last few weeks with inflows and outflows of varying magnitudes. It's as if investors really can't decide what they want out of their equity mutual funds. We saw this week again $122 million coming in despite record high closes on a couple of important benchmarks. Overall, I'd say that we saw value funds with inflows this week, growth and core funds tending to see outflows. The numbers at the top and the bottom kind of reflect that, with multi-cap value funds taking in over $800 million this week, while large cap core funds saw outflows of over $600 million. So between the two core products there, it was no contest. Multi-cap value won it all. Next group to take a look at is their counterpart on the ETF side. Well, equity ETFs. They had a pretty good week, much better than their mutual fund counterparts. They took in a net $450 million this week. Core mid-cap was a clear winner this week. It had $864 million in inflows. The S&P iShares Core Large Cap took in $836 million, not far behind that. And also the Wisdom Tree Hedge Japan Equity Fund had a pretty good week as Abenomics seemed to be taking a backseat to more practical matters. Investors liked that news. They jumped into that fund for about $626 million. At the opposite end, SPY, which is usually the recipient of the biggest inflows or the biggest outflows, was the biggest outflow this week at $3.1 billion. Let's turn our attention to bonds now. Taxable bond funds, as I said, had inflows this week of about $3.2 billion. Fairly good number here. It's fairly flat in the scheme of things as far as performance goes. So we didn't see a whole lot of activity here. Overall, we could say that corporate spreads tended to widen just a little bit this week. The numbers for the investors were definitely pointed toward the corporate side. Core plus bond funds were the week's biggest inflows. They took in about $1.5 billion. Core bond funds weren't too far behind them, around $700 or $800 million. High yield funds also saw some inflow activity. At the other end, government and treasury products tended to see outflows. Well, their ETF counterparts in this week's flows did a little better. They had a little better than expected. They had inflows of $1.2 billion, which is pretty good for them. Like mutual funds, the treasury side tended to see outflows and corporate sides were inflows. LQD led the inflows with $424 million this week. The iShares 1 to 3 year treasury, which is SHY, saw outflows this week of about $1.7 billion, a pretty good number for them. Next group to take a look at is municipal debt mutual funds. Again, $500 million this week. It was kind of surprising. It shows a lot of interest in municipal debt funds by retail investors because this comes after 5 weeks of downside performance. Now, granted, it's only a handful of basis points, 3 to 8 basis points of loss each week over the last 5 weeks. But nevertheless, there's still enough interest by retail investors to keep money pumping into this group. Intermediate munis led the way on inflows with about $175 million. High yield muni also wasn't too bad at $139 million in net inflows. Really not too many outflow areas to speak of this week on that side. Well, the final group to take a look at is money market funds. Again, net inflows this week of $7.8 billion. Really no pattern to this either. It's a fairly small or a regular number for this group. We saw retail investors make net investments of about $200 million this week. Most of the inflow was due to institutions putting about $7.6 billion on the sidelines. Well, that'll do it for this week. I would say join us again next week, but next week is Thanksgiving, so we will not be producing a report. The regularly scheduled Thursday release of data will occur on Friday instead, and we'll just pass on doing a flows video. So join us first week of December then for your next flows report from us. Again, check us online at lipperusfundflows.com, and we'll talk to you later.